Hello and welcome to the latest Levelling Up Goals seminar. Today we're going to talk about Levelling Up Goal number 7, which is widening access to savings and credit. I'd like to thank Aldermore, the specialist banking group, for doing this in association with us. And let me introduce you to our panel today. Justine Greening is the former Education Secretary, International Development Secretary and Transport Secretary. Of course, is in charge of all things levelling up, as you know from previous seminars that we've been doing. Stephen Cooper joins us. He is Chief Executive at Aldermore Group. Previously, Stephen's been Chief Executive at C. Hoare & Company, the UK's oldest privately owned bank, where he's developed and led an extensive programme of change. And prior to that, he spent 30 years at Barclays. You get less for murder, don't you? Guy Opperman is the Conservative MP for Hexham in the northeast of England. He's been an MP since 2010, and he's also Minister for Pensions and Financial Inclusion. And he was appointed that in June 2017 and was reappointed after the 2019 general election. Well, Justine, as always, let's start off with you and maybe give us an introduction to the 7th Levelling Up Goal.
Thanks very much, Ian. And I'm probably this time on a panel with two people who are hugely expertise on this particular Levelling Up Goal of access to savings and credit. And I think I will obviously look forward to hearing what they have to say about how they feel this ties into levelling up. I think from my perspective, to set the background to this, often when I'm talking about levelling up, we talk about, for example, the ladders that people are going to climb up, but then we also talk about their ability to do that, to take advantage of those opportunities that are there. And there are almost these two pieces of levelling up that you need to fix if you're really going to see change on the ground. And one of those aspects that can help or hinder people from being able to climb up a ladder or get to an opportunity and get up that ladder, the next rung, is access to savings and credit. And time again, it fundamentally comes up wherever you really look at the challenges around social mobility. Particularly, I know from your perspective, Ian, as someone who grew up in a rural area, literally being able to afford to get on public transport or get to an opportunity is often something that can genuinely be a challenge that people can't get over because of access to finance. But equally, whether it's being able to get to that job interview and get the suit you need, whether it's being able to have the financial literacy that you need to be able to navigate through life and understand the opportunities financially that are open to you. All of these different elements of financial literacy, access to savings and credit, all of it matters in a really nuts and bolt way for allowing levelling up to happen. And I think on the panel, we've got two people who probably know as much as anyone around the practicalities of where this goal 7 fits into the wider levelling up agenda. So it will be really interesting to hear what they've got to say today. And I really appreciate them being on this panel that we've got. And then finally, for Stephen Cooper, clearly brings more to the panel than just running a key bank that focuses a lot on levelling up and people who need to have lives levelled up. Obviously, as co-chair of the Social Mobility Commission, has had a role over the last several years that goes far wider than just his role as a leader within the financial services sector. So a really interesting webinar ahead.
Well, Stephen, let's come to you. Tell us, first of all, a little bit about your own background and also what does Aldermore actually do?
Yeah, so Aldermore is a multi-specialist lending bank. It's only 12 years old. And it's got to, it was originally on the FTSE 250, so it grew very quickly and then taken private. But in essence, it was set up as a challenger bank to challenge the way things were done. It focuses on, one, providing mortgages to those who are unable to get a mortgage in mainstream high street banking. So typically that are people who've got an impaired credit rating. And I don't mean habitually bad payers. I mean, people have gone through something in life that has impacted their credit rating. We try to give them a mortgage, and what we often see is the majority of those improve their credit rating whilst they have a mortgage with us. So we help them to get back on the straight and narrow. And at the same time, we support businesses with loans to grow their business, create more employment, benefit the communities in which they operate. And we fund all that by taking consumers or businesses' deposits, their surplus cash, very simple, safe products which support that growth. So that, in essence, is what Aldermore does. Myself, I come from a pretty normal background in sort of North London and Hertfordshire. State school, which I left at the age of 16. My mum was a cleaner, and I had a good education, but there wasn't really much aspiration or inspiration or really art of what the possible was around me at that time. So I fell into work, and I was the postboy at Barclays, and then I spent many years there. But the interesting thing was that I was one of 4 who were the first 4 non-graduates on the graduate program. Someone took a punt on us. And interestingly, 30 years later, 2 of those 4 were still there in very senior positions. I was chief executive of business banking, then retail banking, and then payments and Barclaycard. But there are lots of people who helped us along that way. Essentially, it was an apprenticeship. I did night school, which the bank paid for. I gave up the time. They put opportunities in front of me. I grabbed some of those. But there were people along the way who put their arm around me or gave me a kick up the backside when I needed it, opened doors for me. And that really showed me what could be done. I think I gave a lot to the organisation. They created a different life for me. And I've tried very hard to give back in return.
I think that's such a fascinating story, and it's one that I've heard a lot recently, where somebody started at basically the lowest rank in a company and they've ended up running it. I was on Any Questions the other day with a lady, Karen, I can't remember her surname, really embarrassed, but she started off at as a cleaner at Adnams Breweries, and she's now the managing director of it. And it's just such, I mean, you ought to meet her, Justine, because she'd be brilliant on one of these webinars. But she was such an inspiration, and the way, and she's completely got her Suffolk accent still, and she says that sort of no one believes that she's managing director when she introduces herself to them. But I mean, she's come up the hard way. You've come up the hard way, and I think those stories need to be told a little more, for kids. I mean, you said you didn't get in your school, although it was a good education, maybe it didn't give the sort of aspiration that people need to sort of really jump up that ladder. Well, I'd love to hear more about these stories. But I mean, in terms of your experience in wider banking, I mean, 30 years at Barclays and then with C. Hoare, I mean, how did that prepare you for the kind of banking that you're now doing at Aldermore?
Well, it showed me really it's all the mechanics of how a bank works and so forth, that, and I've done all that, different countries around the world and so forth. What it really taught me over that long period of time was real life. I lived and worked in different countries, so I saw different cultural aspects. But I guess I can describe it this way. I mean, there were many, when I was running personal banking, I used to get a lot of graduates come and say to me, you're in the head office building, I'd love to come and work here. I used to say to them, that's great. If you want to get a senior position in the part of the organisation that I lead, you must go and run a branch for 6 months, because that's real life. And you're going to deal with people from all walks of life, and you're going to have to show them leadership, and you're going to have to make some tough decisions, and you're going to have different things that you're going to have to get involved with people who are not like you, but you're going to have to get on with them, and you're going to have to help make their lives better. And I think that's really what it prepares you for. It shows you, in my view, that the impact that a bank can have on people, on businesses, on communities, and it really can have significant impact. And it wasn't great at one level living through the early days of the financial crisis, because bankers were not liked. But there are many, many, many people in the banking community who make life fundamentally better for the average person on the streets.
Guy, let's come to you now. I'll come back to you, Stephen, in a moment, and we'll talk more about the actual levelling up goal. But Guy, you've taken part in one or two of these seminars before, but for people who don't know your background, I think it'd be quite interesting for you to tell a little bit about where you come from in this, and sort of how you've kind of got religion on financial inclusion.
So I'm the first financial inclusion minister, and I used to beat up David Cameron and then Theresa May to ensure that we actually had such a minister. And then when Theresa made me Minister for Pensions, she added on financial inclusion as part of it. And I often say that my day job is Minister for Pensions, my night job is the Minister for Financial Inclusion. That kind of derives, though, back from being a constituency MP. So when I became an MP in 2010, we were just emerging from the 2008 banking crash. My football team was not very good and was sponsored by Wonga. And the payday lenders were rampant on all of my housing associations and my estates. And I was in a position that, there was huge access to savings and credits problems. I didn't have a credit union in my community. I had pretty much we were losing a bank about every 3 to 4 months in the local area, and that has continued since. So and there was huge problems in terms of even corporate access to savings and credit rather than just personal access to savings and credit. So we tried to do something about it. So I've set up 2 banks. I set up a bank called Atom Bank, where I was a starter investor, and it's based in the Northeast. It's a digital bank, a bit like First Direct, and it's a challenger bank, as is Aldermore. It's a very similar organization in reality. And I've been an investor from the word go in that particular organization. It employs hundreds of people, providing access on a very much more commercial basis, very similar to what Aldermore does, in terms of a long-term proper challenger bank. And that kind of is relatively, I wouldn't say easy, but that's relatively easy to do, but it's still pretty hard work. I think much harder is what's called the Northumberland Community Bank, which is a local bank I set up, which has got to be regulated by the PRA and the FCA, just like Barclays is. So you've got to have the same criteria, so it's very hard to do. And you are in a position that provides savings and loans to local communities all across Northumberland. We have one branch, which is in the most deprived part of Northumberland, which is in Ashington. And I'm no longer chairman of it, but I founded it on the back of entirely by voluntary money raised. It doesn't report to Frankfurt shareholders or London. It's a mutual in that respect. And it is using all the good bits of a credit union without the words credit or union involved. But it is a beefed up credit union in a community bank context. But it can make savings and loans of £15,000 literally tomorrow or within an hour. And it is largely a digital bank, an app-based bank. So my kind of follow on from that would be twofold, really, that you can get disruptors, challengers, innovators in this space, and they can make a difference, and they can fill the gap which clearly exists from the mainstream banks withdrawing, which clearly exists from there being problems getting access to bank accounts, basic bank accounts, but it's very hard. And if you're taking forward levelling up goals, there are certain suggestions I would strongly make in this space that would really make a big difference. But I think one of the start points is at least have a Minister for Financial Inclusion, have a minister and we have a financial inclusion task force which meets with the 20 key players in this space, from the Money and Pension Service to FCA to a whole host of people to try and drive forward real change. And there's a lot that we have done, but wait, there's a load more we need to do.
Well, I think the interesting thing is that you survived in that role for 4 years, which most ministers get moved on sort of after a year or two.
One of my colleagues put it to me recently. I don't know whether congratulate you or commiserate.
Well, I think congratulations are in order, because I think ministers who stay in a role for several years, I mean, I think of Ed Vaizey when he was arts minister. I mean, he and culture minister, he achieved a lot in that role because by dint of the fact that he was there for a long time. Stephen, let's come back to you and let's actually look at this, the wording of this goal, widening access to savings and credit. If you can't get access to money, effectively, you're never going to be able to do anything, are you? And it sounds so simple to say, well, if we can give people access to money, but there still have to be restrictions. You still have to, the financial institution has to be confident that they're not throwing good money after bad, that they will get their money back at some point. How do you structure yourselves to try and help people that other banks maybe wouldn't, but also make sure that your financial viability remains?
Yeah, so there's a couple of points there, Ian. One is, I mean, our role, our purpose in society is to back people and businesses to help them grow. We do not rely on a computer saying yes or no. So we have a human involved in that process. Doesn't mean I don't want the computer to help make that decision or that judgment more informed. So I do look at the credit ratings and the bureaus and all that sort of stuff, but we have a human involved to, I guess, add a bit of judgment, experience, common sense to a computer generated score for that matter. And I think we've been pretty successful at that. This Aldermore's grown very quickly, helped a lot of people. It has good risk management practices, and it charges, I think, an acceptable rate of return that enables it to be financially viable, but it's definitely not profiteering or anything. But it is that human overlay that is the difference that many other banks don't provide. I think if I just build on a couple of points there, also leading on what Guy said, I mean, Aldermore has people it can speak to. So there is an app and there's website and so forth. So it is digital. It needs to be more digital than it is, working on that. But you can also get hold of someone. And I think it is that combination of digital and physical. Physical may not be a branch. You might just be get on the phone and speak to someone, that I think is so important. And you know, the digital component, the app component, I mean, most people want the ease and convenience of making transactions on their phone or whatever else. But they also want to know, one is, do I trust this organisation? Is my money safe there?
Yeah.
Two is, if I'm in difficulty, can I talk to someone? And often they don't want to talk to someone easily if they're embarrassed or, you know, they're not financially literate, which I'll come on to in a second. So having that ability to easily speak to someone at a time that suits them, who will give them time and understanding their issues, is really important. And that's where our sort of focus is. And I think, you know, on inclusion, I would suggest, particularly if you sort of compare the UK to global economies, actually we are quite inclusive around the society. So it's relatively easy to get a current account. It's relatively easy to open a savings account. It's relatively easy, maybe in some cases too easy to borrow. But what it really stems down to, are you financially literate? Are you confident around money? We're not really taught about money or budgeting or anything at school. So, you know, I was essentially an apprentice. I'd hired a lot of apprentices. I created apprenticeship schemes. Actually, we spend a lot of time teaching them financial literacy when they start work. How are you going to make sure you can manage your money from 1 week to the next, or from 1 month to the next if you're going to get paid monthly? How are you going to make sure you can afford the bus fare or the train fare or your lunch? How are you going to budget to make sure that works? How are you going to make sure you don't suddenly blow all that first pay packet in the first day and then get tempted to take on credit? And I guess the final point I'd make there, again, it's digital ease and convenience. So when I was running retail banking, and it's interesting talking about Wonga and payday loans, the reason they existed for many people, not just those who couldn't get or maybe shouldn't have got access to credit elsewhere, was the sheer convenience. So I know there are plenty of people who use those services who didn't need a payday lender. It was just that the ability to fulfill was so easy. And I remember trying to learn from that at Barclays, and we got to the point where 6 taps on your mobile phone, 2 of which said, "Are you sure?" and the money was in your account. At the same time, I had to wrestle with, were we making it too easy for some people to borrow money who shouldn't borrow money? So it is that financial literacy, confident and spotting where people are getting into difficulty so that we can help them.
Justine, just on that financial literacy point, isn't that a failure of the education system, where surely that sort of thing should be taught from the, well, I don't know from what age, but probably quite an early age, actually, and maybe it is in some schools, I don't know, you probably do.
I think it is, to be perfectly blunt, and I think there's a whole range of life skills, if you like, that young people need to get through their time in education that we haven't really formally, properly looked at and found the time to deliver. And financial well-being is one of those, definitely. And I think even when you look at maths GCSE that people are doing, this could be part of it much more clearly and distinctively. And it probably should be. And so I do think it starts at school. I do think that if we did put this more into the school curriculum and that whole time you spend at school learning, it might well make maths feel a hell of a lot relevant. But I also think when you look at the wider levelling up goals and goal 9, which is extending enterprise, I think it would give more people more confidence to not just manage their own personal savings, but maybe think that they had the skills to be able to look at setting up their own business. So actually, weak financial literacy is fundamentally about maths, but it's also about confidence. And I think one of the areas that we're looking at with Aldermore is how you need to have simplicity. And it's not just understanding, if you like, what good finances look like. It's then on the supply side, being able to look at what are much more straightforward financial products that you can then work through to knowing that they meet the needs that you've got. And as Stephen says, it is also about having a relationship with your finances and your financial provider. That means that when things do happen in your life, whether they're good or bad, and you need to get advice, that you can do that in a really prompt fashion. And I can reflect on my own experience. I think probably the lowest point I got on my finances was as I was leaving university. I had debt, and I got to the stage where I was literally virtually spending nothing because it was so hard to even get money out of my bank account. But I got to a stage where I was being really good, and yet my debt was going up more from the letters I was receiving from the bank that they were charging me to send each time. And that was actually taking more money out of my account than I was 1 week. And I couldn't get this bank to give me any advice. I remember going down the road to another branch of another bank, and they gave me good advice. And they said, tell you what, Justine, don't have your overdraft, put it into a proper loan that you can steadily pay off over time. You're going to start working in your job next year. Best advice I got, but it was such a weight off my mind, knowing that I was getting more back in control. And I'm still with that bank that gave me the good advice today, and had never had an account with the one that just didn't help me when I need it. And I think millions of people go through that probably every day. And if you look at the impact of COVID, the Resolution Foundation did a great report. And basically what they said, COVID's been a real divider because, of course, people who were in a good financial situation obviously had to stay at home and ended up saving a lot more. But people who were in a bad financial situation and were poorer households ended up borrowing a lot more. So something like 9 million people ended up having to borrow more because of COVID. So that financial situation you find yourself in, and I had found myself on the wrong side of needing to borrow more, really has become even more vital for people in their lives over the past year and a half. So this whole area has probably never mattered more probably than it does today.
This whole area of a lottery of financial advice, which you clearly had, Justine, I certainly have over the years as well, is a real barrier, I think, to people, particularly if you find anything to do with finances rather daunting. You think it's incredibly complicated. You don't feel that you personally are capable of making a rational judgment. Guy, that is a real barrier to people making progress, isn't it? And we've had so many scandals over the last 30 years about sort of independent financial advice over mortgages, endowments, pensions, etc., that you can't blame people for feeling slightly distrustful.
So there's quite a lot of unpick there. Let me answer your question first and deal with that. So what you would really want would be a government-backed, independent, not-for-profit organisation providing advice on money and pensions. Well, we set that up a couple of years ago. It's called the Money and Pension Service. It is a fledgling organisation, but it is specifically to address the one problem that you've identified, and it is very much out there. It's called MAPS, and it is run by Hexham, former advisor to the Archbishop of Canterbury, and also former head of the FCA, and a pretty major player in a whole multitude of ways to try and drive forward access to savings advice, debt advice, navigating out of debt, and more particularly help with pensions. Can I just take up the financial education point, which, and obviously I think everything government does is perfect, and all previous Secretaries of State of Education were utterly right in everything they did. But the truth is that what we did do—
Shirley Williams.
Well, apart from what we did do under Michael Gove was to expand the secondary education to include financial education. We've never really done it in respect of primary education. Now, there is a way forward, and one of the objectives of the Levelling Up goals is to try and come up with solutions. And one of them I would suggest, which I think Stephen should very much have a think about, is, so government did try previously a thing called the Lifesaver Project. The Lifesaver Project ran a series of banks and financial education in primary schools, and it was supported by the Church of England, Treasury, and at the time a little bit of money from Virgin Money. But that does not exist anymore, and I would suggest it is a fantastic idea. And with a new Secretary of State of Education, who may look at financial education in primary schools in a slightly different way than the last couple of Secretaries of State of Education, who were very much not necessarily as focused on this and more very much curriculum focused, which has its merits and of course is very appropriate. I would strongly suggest that that is a potential avenue that an organisation you could head down. I think the other bit I wanted to try and come in on, which is, there is access to cash. So you have the banks are disappearing. So institutions like Aldermore or Atom, which I set up, or the Northumberland Community Bank, are fundamentally online banks. Now, the top-rated bank every single year is always First Direct, which is a completely online bank. It's not Barclays, it's not Lloyds. These are the best for customer service. So you need to try and work out how you get access to finance and access to savings and credit to the mixed economy of an urban and a rural economy, so that there are, there are the 8 access to cash pilots, whereby they're doing, for example, like mini banks and mini post offices in churches and things like that up and down the country, run by Natalie Sini and the Link and various other people. But there is also the ability to try and get app-based interaction with your finances. And so, for example, the savings and banking revolution is that, Iain, you and I are old enough to actually go on to meet our bank manager and a man who we'd have a meeting with and discuss our finances with.
And just always a man, yeah.
Yeah, a man or woman, but maybe it used to be a man mainly. Now, nowadays, everybody has a relationship with their bank manager on a regular basis because they do it through one of these, a mobile phone. And most people are now developing a banking app whereby they have an interaction on a regular basis. And they'll then have a savings app, and soon we'll have a pensions app. And that having those nudges and behavioral changes being directed towards yourself, and you don't need to have a lot of money to have this, is genuinely going to be transformational. And how you can then nudge behavioral change on the back of people's interaction with a mobile phone and an app that does different things in different ways is genuinely going to be transformational. So my view is what you have to do is you have to reform financial education to make it better understood. You have to reform access, so you make things like digital capability better and understanding better, and make the tech a lot more easy to use than it has traditionally been, which is why the likes of Barclays and Lloyds and others are useless at it, because they just can't handle the tech. And then you need to change the way in which there is alternative savings. So you might want to look at and ask yourself a question: why is it in America that there are institutions, the concept of a challenger bank is just so run-of-the-mill, but there are institutions out there, a credit union can do over £10 billion worth of business. I met one of the credit unions in the northeast of America who was doing, pretty much £1 million of business a day. That's another provider who is challenging the present existing banks in a very, very different way. We just don't have that. And we need to expand the alternative providers to provide better access to competition, which is a very, after all, very conservative thing and a very good thing, so that there is alternative providers out there. I could go on about, the way in which we could enhance basic bank accounts and the better things they are. But I think Stephen is right. By and large, you can get access to financial products fairly well, but it's just there are some issues in terms of localization of access and localization of broadband.
We've touched on COVID. I think, Justine, you did a moment ago. Let's expand on that a little bit and talk about the challenges that the pandemic has provided, and looking forward, how in regard to this levelling up goal, how can things be taken forward to maximise benefits to the maximum number of people? Stephen.
I think, sorry, I was slightly distracted and I was just reflecting on some of the comments by Guy, and perhaps I'll just come on to those and I'll
yeah, sure.
answer your question. So I think I have children who are in secondary state schools, and I'm not aware they're receiving any education on financial literacy, so we might need to look at that. By the way, I don't think it's just down to government to solve for. I think employers, financial institutions have got just a bigger role to play.
PhD.
And I do think there's something about when children finish exams, that sort of quiet period, is that a time where you can think about some of the life skills that Justine refers to. Financial education is one of those, as well as just how to handle yourself in a different environment. I had a town hall in the office today. There are two people on apprenticeships who are in their first ever jobs, and just how to sort of handle themselves in a workplace that they're learning, that they're doing tremendous. Similarly, if you're lucky enough to be able to go into university, how are you going to be sort of financially managing your life, or particularly sort of taking on student loan and therefore making sure that you don't get into debt beyond that, and that you can make that loan last you. So I do think that there's more to be, but one of the things I learned with the Social Mobility Commission, it's not just the role of government, it's regional communities, it's employers, it's educators coming together around that. I also think, and again, sort of when we think about things like, and I'm looking at the more sort of disadvantaged in communities, but when we use language like pensions and so forth, they don't really understand that. That's a big, scary word, and they don't see people having pensions around them. So how do we give people confidence, use language that they understand, and don't make them feel inferior because they don't have that sort of level of financial well-being around them. So reaching into those communities in a way that those people feel they want to engage in those conversations, give them access to, again, this is where the community is going to go, and it's got harder through COVID because those on lower incomes have faced the more difficulty. We know that there are more children in relative poverty. We know that it's the lower income earners who have had the toughest times. And we also know the government's done tremendous stuff around supporting in general, but it's those that need more support going forward. Arguably it's tougher with the reduction in universal credit, but it is being able to, even if you can put £1 or £2 away for a week in a very simple bank account or simple savings account with low cost, low charges, just so you've got 10, 20, 50, £100 behind you, just in case you need it, and then making sure that you don't fall into the trap of getting high cost credit, which creates that mental anguish and the inability to get yourself out of that very easily. And there are, credit unions are great, and more competition is good, I would say. Not to put people off credit unions, but they're the ones that also fall over the most if you speak to the FSCS. But there are roles in the community to play here for sure.
Oh, Guy, you look as if you're desperate to get in there.
The credit union sector in this country is very limited in its capability, whereas the credit union sector in the United States, for example, has much greater powers and is a proper challenger to the mainstream banks. Now, the present scheme of credit unions, and yes, they do fall over, is because of the model that they are trying to pursue in a 21st century world, which is very, very difficult because their margins, putting it bluntly, are really, really tight. And they are by and large lending to people who default more than people that default with banks. So it's very, very difficult. Therefore, there's a whole host of complications. If you reformed and made a different type of sector that was genuinely a challenger to the mainstream banks, then I personally think that you would have what you have in America, which is you've got much bigger and bolder lending alternatives, and they're very much linked to, and you can then be linked to sectors, much more linked to unions, and very much more linked to states, and you get proper localized lending. So, Northumberland Community Bank is fundamentally based in Northumberland, and we look after that Northumberland community, and I have people who invest and support that bank because it is a localized bank. That doesn't exist at the present stage in this country, which is a deficiency to this country. And I should point out that, in Germany, there are only 3 major institutions that every town has. It has a town hall, it has a church, and it has the local bank. And that local bank is run by a local branch manager, and it only lends to the local community. And the local banks in Germany, there's over about 300 of them, and they're the ones who didn't go bust in the 2008 recession.
Yeah, I'd agree. I'd just jump in there, if I may, Ian, because the credit unions have a role to play. And one difference, I think, between the UK and the US, and I've worked in both, is that there's a much more deeper community spirit in the US, and legislation policy also enables that, which doesn't happen in the UK. And certainly the role at Aldermore is to be in those local communities. We have people on the ground in those communities. And by the way, I don't need bricks and mortar to do that. All they need is to get around, and they've got deep relationships in those sectors and in those geographies. Because that is what makes a difference. That's what enables us to make a better credit decision. We've got an understanding of that borrower, we've got an understanding of that business. You must go back to the very basics of banking, which is character, which is, do I believe what they're doing? Can I see it on the ground? Can I see what their colleagues, their customers, their suppliers say about them? That's how you make a credit lending decision, not just on what a computer says or doesn't say.
So let me, can I just come in on that? Because it's very,
Yeah,
I think,
sure.
very
I'm
good
enjoying
thing.
this.
For,
Justine, I don't have to say anything.
We'll come in eventually. I'm just trying to find a space somewhere.
So there, all right, sorry, I'll be very quick.
It's
So
okay.
Lloyd set up because it was the Welsh Sheep Farmers Bank, and that was how it originated. What if you want a solution to this going forward, and you want to make recommendations to actually do cogent policy? You would look at the devolution that is going on, whether that is to Teesside, to West Midlands, to Liverpool, and you would empower those communities and the mayor to set up, under a delegated PRA authority, a community lending bank for that local area. And it would not be that difficult. And there's an example of it. You want an example? It already exists. It's called the Cambridge and Counties Bank. Absolutely groundbreaking bank that takes the local government pension scheme of the Cambridge District Authority, and it then uses that money, the capital reserves, to invest in the local area of Cambridge. So most of the development you see around Cambridge is financed by the local government Cambridge pension scheme, which then of course develops stuff on a long-term basis, and then the benefits of that go back to the holders of that pension scheme. There are ways of doing this, of having seriously local lending that already exists, which could be expanded to really address this. I'll let Justine come in and be quiet for a bit.
Well, so it's brilliant listening to both of you. And I think what's really fascinating is so much of levelling up now we understand has to be a place-based approach. And actually, it turns out it's probably the same with this goal 7 on access to savings and credit, and this issue of actually understanding how different communities have different financial challenges and almost different needs. And therefore, you can really start to see how this could, a more place-based approach on financial literacy and inclusion and also provision, could start to sit alongside a whole range of other work that was being done at a local level. And as both Stephen and Guy are saying, there's an online piece of this that possibly can unlock access to finance, particularly for people in more rural areas. But also, and I think this is where Aldermore is looking as well, go hand in hand with almost a really advanced approach on financial advice and support that is much more done at a sort of face-to-face human level, effectively, whether it's online face-to-face, as it were, or offline. But it ends up being wrapped around a wider set of choices that people and communities are making, rather than, as we've seen over the last, say, 10, 20, 30, 40 years, something that is almost detached from everything else that we do in life at a local level. And, you know, generally people are much more used to dealing with national banks. And I guess what you're both saying is that ultimately needs to be recalibrated to a more localized approach that can be tailored to more local communities, which I thoroughly.
So effectively what you're saying, Guy, is that it's not just, you can't just do political devolution, you have to do some form of financial devolution too.
It's more about capability. So at the moment, it is a very centralized banking structure. It is a very rigorous way in which doing it. And genuinely, when I set up the banks I set up, which are nothing like Barclays, I was judged on exactly the same metric as Barclays Bank, which is ridiculous. Now, what you need to do is you need to say to local government leaders, you already run regeneration in certain areas. What more could you do? Would it not be a good thing to free you up to do X, Y, Z? Now, some of that I'm already doing. The call I was on, which I was late for this one, was that with the local government pension scheme, trying to persuade them to look at things of finance on a local level on a much different basis. Slightly, you need to look at stuff as to how it is you enable mayors and devolved people who are, frankly, you know, we're a very young organization in terms of mayors, whereas the Americans have been doing governors and state governors and local leaders for ages and ages and ages, formulating new policies and then driving forward innovative change for ages and ages. And we're quite young in the way we're doing that. But I still think we can learn lessons and do things very differently.
Can I add in there? I'll just say a couple of things. One is, with the social mobility hat on, we have been pushing for some time for more power to the devolved regions in particular, because two reasons. One is capability does vary. And secondly is nuance around place varies. So the solution in Northumberland might not be quite the right solution in Thanet, for example. And therefore you need that local knowledge coupled with that local capability. And I share the frustration. I run a relatively small challenger bank. I say small relative to the size of Barclays. I'm held to the same criteria by the regulators and sort of the authorities. And there's consultation around that at the moment. But as we become bigger, it starts to become harder for us to challenge, because I'm treated the same way and I have to operate the same way and I have to hold the same levels of capital and all the other expenses, system requirements around that. I'm not saying that's wrong, but there has to be a different way, because otherwise you end up treating everybody the same.
When you talk to your colleagues in the sector, do you think that they get this agenda, the levelling up agenda, in the way that you clearly do? Because it's great that you do, but if it's not, if this whole issue isn't discussed, understood throughout the sector, very little is going to change very quickly, is it?
I think there's been a lot of progress into what Justine described.
He's choosing his words carefully, guys.
I am. So what Justine described, someone, a ton of money for a letter to tell them that she's £5 overdrawn. That kind of behaviour, I think, has gone. I don't recognise so much of that at the moment. I think there's a lot more to be done around the wider financial services sector, and that's pretty big, to help people level up in general. And that's because it's hard, because things like, so why are bank branches being closed? I closed bank branches when I was at Barclays. On the whole, why did I close those branches? It was the ones that nobody went into. And for me at that time, and it may be different now, I know it's different now, but it wasn't cost back then. My biggest challenge is I couldn't get people to want to work in them. They didn't want to be stuck in those branches, not seeing people come in throughout the day. Now, I think it's gone possibly too far, and now bank branches are being closed where there is a need. And it's not about cashing a check or withdrawing money. It's often to engage with people in the community. We've seen examples where when you can see if they're in financial distress, you can see if they're being coerced, you can see if they've got real mental health problems, you can see if they're being the victim real time of a fraud. You can do some of that online, but not enough. So I still don't think there's enough there. I think it has fundamentally got better, but it's still got a long way to go.
Justine, looking at this from the outside, how do you feel that things are progressing? Obviously, you're spending a lot of your time spreading the gospel on this, but is the financial sector one that is willing to receive the message compared to maybe others that we've talked about over the last few months?
I feel it's made some progress, but it's got to go a lot further, a lot faster, if I'm frank. I think it's that in a nutshell. And I think if you look at how much, for example, utility companies are doing around affordability of bills and what they need to do to make sure their bills are affordable, some of them are working upstream on employability because they know that the customers who can't afford bills generally are not in jobs. And so actually, if they can help them get into work, and they've thought in many cases really broadly around their organization and how it can directly help. I think financial services is behind that, but has a huge opportunity to think much more creatively about the role it can play in driving levelling up, not just around access to savings and credit, which is really where it starts, but around financial literacy, around people's ability and confidence to start businesses, around understanding how the choices you make on mortgages can open up or close down opportunities for your ability to move. All of that, I think, is really on first base by comparison to where it could get to if a lot of really smart people in the sector, I think, got more collectively engaged. And I think the debate around place-based banking and provision is really interesting, because I think if you do move to that route, you will get a lot more innovation, and you will get these local banks or credit unions, whatever they end up being, starting to work more collaboratively with all those other players at a local level, where we know often finance is the thing that means everything else can suddenly slot into place. And so, yeah, I think there's a long way to go on it. And the last point I'd make is really diversity within the sector. And, you know, financial services is often based in London, yet is still remarkably unrepresentative of that much more diverse city that it's traditionally always operated out of. So I think a lot of really good work done. That's not to take anything away from that, but just a long way to go, and a massive opportunity actually for change. And becoming more diverse is probably how you get those ideas in the organisations to really then deliver a better product. And I think for a company like Aldermore, and Stephen can talk about this, that's one of the interesting things about being a challenger bank, is it does have that ability to take a fresh look at some of these long-standing challenges that often customers face by having those different perspectives inside the bank itself.
It's the people like us syndrome, isn't it? That if we do job interviews, we tend to appoint people who are a bit like us, and we have to get out of that mindset. Do you think there are, Guy, do you think there are systemic issues here that are involved, maybe very sort of small c conservative issues, where the financial sector is more resistant to change maybe than other sectors?
I don't think they see any benefit of levelling up on their corporate bottom line. I think the practical reality is that Barclays, Lloyds, the top 5 mainstream banks are dependent upon their shareholder value, and their executives their lunch is being slowly but surely being eaten by the challenger banks, by their lack of tech, by their dinosaur approach to so much. You know, Moneybox, which is a savings app, has got more customers joining it than most of the mainstream banks put together. There are dinosaurs in a digital age, and I don't see that they have any appetite, frankly, that this is something that they are really that focused on. I think so. I introduced ESG as a concept to pensions, and work with colleagues at Treasury to make sure that the environmental, social and governance elements are part of it. Now, I don't think there's any doubt whatsoever that the environmental element is becoming much more mainstream and much more accepted. The governance element, Justine is right. You know, there are far too few chief executives who are women or who are diverse background. But at the very least, that argument is being made. And it is the very least that argument, people are being named and shamed who are not going down that particular route. I think the social element of what is the impact of your government investment, or your individual investment, or the outcome of what you're doing, has not been appreciated. But putting it bluntly, I just don't think there is any appetite for levelling up at mainstream banking in any real way, and I have certainly not seen a huge amount. I think they are mainly about protecting shareholder value and surviving in a very difficult age, is my bottom line. So more power to them.
But the thing is, Stephen, that if the big 4 or 5 don't adapt, they are going to, in the long term, regret it, because they will be losing customers hand over fist. I left Lloyds Bank after 40 years last year, and because every time I wanted to get in touch with them, I had this feeling of dread. And I'm thinking, well, I'm their customer, I shouldn't have to feel like that. And I think it's the same in the energy market. I mean, if all the banks looked at the example of Octopus Energy and the way that they deal with their customers, where I regard them the best company I've ever dealt with in my entire life, because they actually treat people as individuals. And I think that's what hopefully you and the challenger banks are doing to take away the restrictive influence of some of the bigger banks.
What I've been struck by since I've been in a challenger bank, or come out of the sort of the main high street banks, and I think I agree with guys, I don't think there's any lack of desire to want to do things differently, but it's hard to make a difference on the bottom line, and there are competing pressures, and I sound like I'm defending. I'm not part of the sector anymore, and there's a reason why I've chosen not to be part of that sector anymore, and there's a reason why I've chosen to be in a challenger bank. I've been struck by. So I've been in banking a long time. Joined at 16, and I've been struck by at Aldermore the quality of the talent, particularly more junior ends, and where they have come from. And by the way, we've tried to be much more diverse. So as of last week, I had my first Kickstart apprentice start. This young chap is still sofa surfing. And it just brings energy and diverse thought and experience into the organisation. We've got quite a few actually now within Aldermore. But the point I'm getting to is that you look at, so why have Aldermore got this talent at the more junior level, younger level? And by the way, they're progressing their careers quite rapidly than say a high street or a main street bank. And it's because they're drawn to a challenger, they're drawn to wanting to make a difference, they're drawn to our purpose, and they feel as if they are, and I hope they are actually doing it, they are making a difference to the communities in which they operate. So when they go home at night and talk to their partner or their parents or their friends, they feel good about what they've done. If you've helped, as we do every single day, someone get a home for the first time who cannot get a mortgage elsewhere, or a business such as the one in Sheffield I saw a couple of weeks ago, who we've helped to expand, and it's creating 100 jobs in that part of the UK. And these are jobs for people who don't have a job today. You just got to feel good about that. And I don't think that same level of satisfaction is in big banks. And that's why I think challengers have a role to play, and they are succeeding and they are getting growth. And it's just a different agenda.
Well, Justine, let's wrap this up. Do you want to sort of try and draw some of the strands from this together? Because I think of all the different webinars that we've done over the past few months, I think there have been some quite controversial comments made in this one, mainly by Guy, it has to be said, which is interesting because he's a government minister, and government ministers normally aren't controversial. What do you make of what we've heard over the last 50 minutes or so?
I think what's interesting to me is levelling up is about changing a status quo. And that status quo for Britain is that other things equal, we have no equality of opportunity. So the status quo is that where you start does broadly dictate where you're likely to finish. And actually, today what's been brilliant is to listen to two people who are involved in challenging the status quo of the finance system that underpins, if you like, our day-to-day life. But I think also what it's got to is almost the why we see what we currently see. So almost this sense of a bigger and bigger and bigger banks that have almost got so big they lost touch with what many of them themselves were originally set up to do in the first place, ironically, and almost having to reinvent the whole point of banking. And that's been the discussion that we've had today is, well, what was any of this access to finance about? Why did it matter in the first place? And the answer is it really does matter, because actually money is everything in people's lives. And ultimately, if you can't get money when you need it, that is one of the most profound problems that any of us can face. And that certainly was my experience as well. And, my experience was genuinely scary when I wasn't sure how I was going to get cash. That's the emotion that I felt, and also confusion, frankly, about what on earth to do next. So this is really at the heart of levelling up. And I think it's been brilliant to hear two people so passionate about changing the status quo and challenging it, because that is what we'll need to do on this particular goal if we are going to have success.
And I guess we shouldn't be surprised if people start to lose confidence in capitalism in general. It's partly because they found it so difficult to get access to capital. And if you can't get access to capital, why should you support anything to do with capitalism? In a sense, it comes down to that, really. And I think in 5 or 10 years' time, if this agenda has been in any way successful, I think there will be so many more people who will just know where to go, who will know the organizations to contact. And I think there probably needs to be a much better communications job done on sort of directing messages at the people that we're talking about to enable them to know where to go. Well, look, it's been absolutely fascinating. Thank you very much indeed to everybody. Stephen Cooper from Aldermore, Guy Opperman, the Minister for Pensions and Financial Inclusion, and of course our very own Justine Greening. If you'd like to catch up on some of the other webinars that we've been recording on the 14 different levelling up goals, you can do that on the Levelling Up Goals website. Join us again soon. Goodbye.